Tom Lee, better than expected CPI just lit a fire under the market. That's the headline today, and it comes straight from Tom Lee, the co-founder and head of research at Fundstrat Capital, in his latest appearance on CNBC's Worldwide Exchange. In that interview, Tom lays out why this latest CPI data, the growing possibility of Fed rate cuts and some key market trends, could set the stage for an even bigger rally ahead. He also shares why he's staying bullish long-term on names like Nvidia. And yes, he even touches on crypto. In a moment, I'm going to show you the full clip of Tom Lee on CNBC so you can hear exactly what he said. Then I'll give you my own detailed reaction and break down the key takeaways you need to know. And after that, we're diving into my in-depth analysis of the 3 best tech stocks to buy right now. Stocks I believe are well positioned to benefit if Tom Lee's outlook plays out. So if you only watch one video today, make sure it's this one. And make sure you stick around all the way to the end. Go ahead and smash that like button. Let's see if we can hit 1,000 likes on this one. Share it with anyone you know who's watching the markets right now. Drop your thoughts in the comments. And of course, subscribe so you never miss the next big investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Alright, let's hear exactly what Tom Lee had to say.
Why don't we start off with the markets hitting new record highs once again after that CPI report that, in all honesty, it was kind of mixed. Headline was better than expected. Core was just slightly hotter than expected. What's your take on that?
Well, I think it's just a reflection of the fact that the market was bracing for a hot CPI, knowing that not only was the Fed, but economists were warning that we'd start to see inflation coming through in the July CPI report. So I think it was actually elevated compared to where it was in June, but I think it was much better than expected. So it's one of those rip off the Band-Aid moments.
All right. We were showing the CME Fed Watch tool earlier, just under a 95% chance of a cut coming up in September, being priced in by bond traders. That rate cut, what area of the market does it benefit? Does it definitely just benefit the cyclical sectors? What does it mean for the tech trade, et cetera?
To me, there's a whole area of the market that gets sort of lit up when the Fed gives sort of that dovish signal, or, Fed is resuming its cutting cycle. And I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin.
Oh, Bitcoin. All right. That's interesting. By the way, potential rate cut. We've often thought we're going to get those rate cuts and they don't actually happen, even though they're being heavily priced in right now. With that,
that's right.
I want to get to your word of the day. What's your word of the day today, Tom, and why?
The word of the day to me is breakaway. And the reason I'm saying that word is that in early July, Bitcoin made a breakaway move, and I think Bitcoin has been leading the markets by a month. So believe it or not, I think that this is the month that the S&P, makes new highs towards 6,500, 6,600.
Interesting. So you think we hit new highs this month? What's the catalyst? Because, we're pretty much through earnings season. So what pushes us higher other than a lot of optimism over a rate cut coming up?
Frank, I think part of it is positioning and sentiment, because I think investors were thinking this is the dog days of August and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season. And at the end of the day, the economy is holding up pretty well. And, I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger.
All right. Tom, you didn't send us a pick, but I'm going to guess that BitMiner might be your pick today. It's a company that you're involved with. I want to talk to you about Ethereum and also BitMiner.
Yes. Well, Ethereum, has probably become the surprising sort of hit for cryptocurrencies this year because it's up 28%, outperforming Bitcoin. But, in some of the work we've done, we believe it's the biggest macro trade over the next 10 to 15 years. And a lot of it has to do with the fact that stable coins have really become the ChatGPT moment for crypto. And now we have the Genius Act and Project Crypto from the SEC, which is Wall Street, essentially running onto the blockchain. But one of the best ways we believe to sort of have exposure is through Ethereum treasuries. And that's a company like BitMine, which I've become chairman recently.
So when we're talking about Ethereum, it's one cryptocurrency. Stablecoins are obviously in the news, especially with the Circle IPO and Circle just reporting its earnings and offering more shares. And then you mentioned there's Bitcoin as well. Why are you so bullish on Ethereum? What are the opportunities you're seeing in Ethereum in particular?
Well, Ethereum is the second largest blockchain, and it's different than Bitcoin because with Bitcoin, you can't really do programmable contracts, so smart contracts. Wall Street needs to find a stable and legally compliant blockchain to work on. The majority of stablecoin creations are taking place on Ethereum. And when you look at where JP Morgan is building a lot of its layer 2s or Coinbase or Robinhood, they're choosing to do it on Ethereum. So it is the place where Wall Street is essentially financializing the system.
All right. So, by the way, you're not the only bullish person or bullish company when it comes to Ethereum. We're just looking right now. Standard Chartered raising its year-end target for Ethereum to 7,500 from 4,000. Right now, Ethereum's trading right around, I believe, 4,700. Are you this bullish, 7,500 by year-end?
I think that's within the realm of expectations. Ethereum, I think first needs to clear its prior highs of around 4,800. It's within 6% of that now. Believe it or not, Bitcoin's obviously been making many new all-time highs this year, but Ethereum is still below its 2022 highs, 2021, 2022. So I think once it clears that level, I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
All right, one more time before we get out of here. You're known for your granny shots. Can you give us one of your granny shots right now with the fact that we have the markets trading at all-time highs, the S&P and the NASDAQ, again, closing at record highs yesterday?
Yeah, I think really one of the granniest of our granny shots is NVIDIA. It's still one of the most important companies. Well, it's probably the most important company in the world. And in terms of forward multiple at 30 times, it's actually still reasonably priced. I believe its PE multiple is still ranks number 38. There are 37 stocks in the S&P 500 with a higher PE than NVIDIA.
Tom kicks things off by talking about the recent CPI, that's the Consumer Price Index, which measures inflation. Now, the report itself was a mixed bag. The headline inflation number came in better than expected, but the core inflation, the one that strips out food and energy, was a little hotter than expected. Why did the markets react so positively anyway? Tom's take is that investors were bracing for much worse. The Fed had been warning about possible hotter inflation. Economists were cautioning it might come in strong, and the July CPI was expected to be elevated compared to June. So when the numbers weren't as bad as feared, it became one of those rip the Band-Aid off moments. The relief rally kicks in, people exhale, and stocks push higher. Next, the host mentions that bond traders are now pricing in a 95% chance of a Fed rate cut in September. Tom points out that when the Fed goes into dovish mode, meaning they're easing rates instead of hiking, there are specific parts of the market that light up. For him, that means financials, small cap stocks, Bitcoin. Yes, Bitcoin, which he believes benefits from increased liquidity in the system. The logic here? When rates drop, borrowing becomes cheaper, money flows more easily, and investors are more willing to take risks, which helps those asset classes. Tom's word of the day was breakaway. He says Bitcoin made a breakaway move in early July and has been leading the markets by about a month. In his view, that means the S&P 500 is next in line to break higher, possibly hitting 6,500, 6,600 points this month. That's a big call, especially considering we're already at record highs. His reasoning is partly sentiment-based. Investors were expecting the dog days of August with weak performance and maybe some hawkish inflation data, but instead they got better than expected CPI and decent earnings. That combination plus investors being positioned too cautiously can fuel a surprise rally. Now here's where it gets really interesting. Tom shifts the conversation to Ethereum and why he's so bullish on it. Ethereum has actually been outperforming Bitcoin this year, up 28%, and in Tom's view, it's the biggest macro trade for the next 10-15 years. Why? Because of stablecoins. He calls them the ChatGPT moment for crypto, meaning they could trigger mainstream adoption the way AI tools exploded in popularity. He points to big developments like the Genius Act and Project Crypto from the SEC, which in his view signal that Wall Street is essentially running onto the blockchain. Ethereum is where most stablecoin activity is happening, and it's also the platform where big players like JP Morgan, Coinbase, and Robinhood are building their Layer 2 solutions. Bottom line, in his eyes, Ethereum isn't just another cryptocurrency. It's becoming the foundational platform for Wall Street's move into blockchain-based finance. When asked about Ethereum's price outlook, Tom says $7,500 by year-end is realistic, and maybe even conservative. The key is that Ethereum still hasn't broken above its all-time highs from late 2021, ~$4,800. Once it does, he thinks the move could accelerate, with some targets ranging from $10K to $15K. He also notes Ethereum's correlation to small-cap stocks, meaning if small caps rip higher, Ethereum could follow. And then of course we get to Tom's trademark granny shot, his term for his most confident calls. This time it's Nvidia. Even after its monster run, Tom believes Nvidia is still reasonably priced at about 30 times forward earnings. In his words, it's probably the most important company in the world right now, which tells you how central he thinks AI and chips will be to the global economy moving forward. So here's how I see it. Tom Lee's interview paints a picture of a market that's running on relief, liquidity, optimism, and surprise upside. He's connecting the dots between Bitcoin leading equity markets, Ethereum's role as the Wall Street blockchain, and small caps potentially ripping if the Fed follows through with rate cuts. The boldest take for me is his Ethereum call. Not just the price target, but the idea that we're watching the early stages of the financial system being rebuilt on blockchain rails. If he's right, that's not just a trade. That's a generational shift in finance. As for Nvidia, I think he's doubling down on something a lot of people already believe, that it's a must-own if you think AI is going to keep growing. So, whether you agree with Tom Lee or not, his outlook has one big theme. We're in a moment where sentiment was too negative, the macro backdrop just improved, and risk assets, from small caps to crypto, could have a lot more room to run. Now let's dive into the 3 best tech stocks to buy now and grow your portfolio. First up is ASML holding NV, ticker ASML, the undisputed leader in advanced semiconductor equipment. Based in the Netherlands, ASML is a company that sits at the very heart of the global technology ecosystem, quietly powering the digital revolution from behind the scenes. Every smartphone, laptop, and AI server you use relies on chips made with ASML's technology. Whether you're streaming a movie, making a video call, or using AI-powered apps, the chips inside your devices were likely created using ASML's machines. Here's the secret: ASML doesn't actually make the chips themselves. Instead, they build the ultra-sophisticated machines that make it possible for companies like TSMC, Samsung, and Intel to manufacture the world's most advanced semiconductors. These machines are enormous, bus-sized, ultra-precise lithography systems that operate in spotless clean rooms. They're the backbone of every major chipmaker's production line, and without them, modern electronics simply wouldn't exist. ASML's true monopoly lies in extreme ultraviolet, or EUV lithography. This is a technology so advanced and complex that no other company on Earth has managed to replicate it at scale. ASML is the only supplier, and that gives them a unique position of power. EUV machines use incredibly short wavelengths of light to etch circuits onto silicon wafers at the nanometer scale, thousands of times thinner than a human hair. This allows for more powerful, energy-efficient chips that drive everything from smartphones to supercomputers. This monopoly gives ASML massive pricing power. Each EUV machine sells for over $200 million, and the demand for these machines is only rising as the world's appetite for advanced chips grows. In fact, some of the world's largest tech companies are willing to wait years just to get their hands on one. Why is demand so high? The answer is simple: AI, 5G, autonomous vehicles, cloud computing, and the Internet of Things. All these technologies require ever more advanced chips. And ASML is the only gatekeeper to this next generation of computing power. Their order backlog stretches years into the future, giving investors rare visibility into future revenue. This kind of predictability is almost unheard of in the tech world, making ASML a standout in terms of financial stability. Financially, ASML boasts strong revenue growth, 50% plus gross margins, and a fortress balance sheet. Their consistent performance has made them a favorite among long-term investors and institutions alike. They return value to shareholders through dividends and buybacks, and their relentless investment in R&D keeps them years ahead of any potential competition. Innovation is in their DNA, and it's what keeps their moat so wide. ASML Holding continues to stand as one of the most important players in the global semiconductor industry, backed by a market cap of just over $290 billion. With earnings per share at €24.03 and a PE ratio of 26.62, the company generated €28.26 billion in revenue in 2024, delivering a net income of €7.57 billion. One of ASML's biggest advantages is its monopoly on advanced lithography tools, specifically EUV technology, which is essential for producing the most cutting-edge chips. As semiconductor fabrication plants continue to expand worldwide, the demand for these machines is only expected to grow. Investors also have another reason to stay bullish. ASML recently declared an interim dividend of €1.60 per share, payable on August 6, 2025. a clear sign of the company's commitment to returning value to shareholders. On top of that, high-profile investors have been adding to their positions, a sentiment driven in part by the ongoing AI boom that is pouring billions into advanced chip technology. While the company operates in a complex environment with its fair share of macroeconomic challenges, ASML's dominance in EUV machines and a solid dividend policy provide a cautiously optimistic outlook moving forward. Of course, there are risks. The semiconductor industry is notoriously cyclical, and global geopolitics can impact sales, especially with ongoing tensions between the US, China, and Europe. But the long-term demand for chips is undeniable, and ASML's technology is essential to meeting that demand. Every new chip fab built anywhere in the world needs ASML's machines. Think of them as the only supplier of picks and shovels in the modern tech gold rush. Without ASML, the entire industry would grind to a halt. And they're not standing still. Their next-generation high-NA EUV machines will push chip technology even further, enabling even smaller, faster, and more efficient chips. This will only strengthen their lead and deepen their competitive moat. The more companies use ASML's systems, the smarter and more efficient those systems become. This creates a powerful network effect, making it even harder for any competitor to catch up. ASML's management is world-class, navigating complex global challenges with skill and vision. Their leadership has steered the company through decades of technological change and market volatility. Bottom line, ASML is the toll road for the entire semiconductor industry. Every chip that powers our digital world passes through their machines, and every tech breakthrough pays them a toll. Their business model is as close to a license to print money as you'll find in tech. With every new wave of innovation, from AI to quantum computing, ASML stands to benefit. It's a high-quality, near-monopoly business with a long runway for growth. As the world becomes more digital, ASML's importance will only increase. Yes, the stock trades at a premium, but you're paying for certainty, innovation, and a critical role in the digital age. Few companies offer this level of strategic importance and technological leadership. For serious tech investors, ASML is a must-watch. It's not just another tech stock, it's a cornerstone of the entire industry. If you want exposure to the future of technology, this is where you start. ASML is the gateway to the next era of innovation. ASML isn't just a stock, it's a piece of the digital world's foundation. Its technology underpins everything from your phone to the most advanced AI systems. That's why it deserves a spot on your radar. In a world where technology is the new infrastructure, ASML is the company building the roads. Let's move to our next tech powerhouse, CrowdStrike. Next up is CrowdStrike Holdings, ticker CRWD, the cybersecurity pioneer protecting our digital lives. In a world where our personal and professional information is increasingly stored online, the need for robust digital security has never been more urgent. CrowdStrike stands at the forefront, defending against the ever-evolving landscape of cyber threats. As the world moves online, every device becomes a target for hackers. From laptops and smartphones to smart home devices and corporate servers, the attack surface is expanding rapidly. The old antivirus model? Outdated. Traditional security solutions simply can't keep up with the speed and sophistication of modern cyber attacks. CrowdStrike's Falcon platform is cloud-native, lightweight, and powered by AI. It's like having millions of digital guards patrolling every device in real time. This means threats are detected and neutralized in seconds, not hours or days, no matter where the device is located. Their threat graph shares threat data instantly across their network, making every customer safer as the platform grows. The more data CrowdStrike collects, the smarter its AI becomes, learning from each attempted attack and adapting to new tactics used by cybercriminals. This creates a powerful network effect. More customers, smarter protection. Every new client strengthens the entire ecosystem, making it harder for hackers to succeed. Unlike legacy players, CrowdStrike is proactive, using AI to stop threats before they cause damage, even if it's a brand new attack. Their system doesn't just react to known threats, it anticipates and blocks unknown ones, providing a level of security that's essential in today's fast-moving digital world. Their SaaS model means recurring high-margin revenue. Customers stick around and spend more each year. This subscription-based approach provides predictable income and allows CrowdStrike to continually invest in research and development, staying ahead of the competition. Their net retention rate? Over 120%. Existing customers keep buying more. This high retention rate is a testament to the value CrowdStrike delivers, as clients expand their use of the platform to cover more endpoints and add new security modules. Cybersecurity is now a board-level priority. The cost of a breach is massive, so companies invest in the best. A single data breach can cost millions, not just in direct losses, but also in reputational damage and regulatory fines. That's why organizations are willing to pay a premium for proven, effective protection. CrowdStrike's market is huge and growing as businesses move to the cloud and remote work expands. The shift to hybrid and remote work has accelerated the need for endpoint security, and CrowdStrike is perfectly positioned to capture this demand. Financially, they're posting 30% plus revenue growth and are already profitable, a rare feat for a high-growth SaaS company. Their strong balance sheet and efficient operations give them the flexibility to invest in innovation and strategic acquisitions. Their land and expand strategy works. Start with endpoint protection, then upsell identity, cloud, and threat intelligence modules. This approach not only increases revenue per customer, but also deepens the relationship, making clients more reliant on CrowdStrike's ecosystem. CrowdStrike, with a market cap of $105.6 billion, posted $3.95 billion in revenue in 2024, but still recorded a small net loss of $19.27 million. Despite that, the company continues to be one of the most innovative names in cybersecurity. On August 14th, they unveiled Falcon Next-Gen Identity Security, a major upgrade designed to protect identities across multiple environments, a move that reinforces CrowdStrike's leadership in the cybersecurity space. This comes on the heels of the company being recognized as a leader in the 2025 𝗗𝗟𝗏𝗧 Radar report for SaaS security posture management, where it scored perfectly in key categories. The market has responded positively. On August 12th, CrowdStrike's shares climbed 2.2% to close at $435.80, signaling growing investor confidence. However, the company does face heavy competition from big names like Palo Alto Networks, making it critical for CrowdStrike to keep innovating to protect its market share. Balancing that innovation with market pressures will be key to sustaining growth. Industry analysts consistently rank CrowdStrike as a leader. They're recognized for both their technology and their execution, earning top marks in independent evaluations year after year. Their incident response partnerships turn crisis into customer acquisition. Companies hit by hackers often become long-term clients. When a company faces a breach, CrowdStrike is often called in to help, and many of those emergency clients end up adopting the platform permanently. Founder-led by George Kurtz, CrowdStrike has deep industry expertise and a clear vision. Kurtz's leadership ensures the company remains agile, innovative, and focused on its mission to stop breaches. Risks? Competition is fierce and the stock is volatile, but their tech lead and sticky customer base give them a strong moat. While new entrants and established players are always a threat, CrowdStrike's rapid innovation and customer loyalty set it apart. Once a company deploys CrowdStrike, switching is tough. Security is too critical to risk. The integration runs deep, and the cost and complexity of changing providers make CrowdStrike's solutions especially sticky. The best cybersecurity talent wants to work here, fueling innovation. Attracting and retaining top minds in the field allows CrowdStrike to stay ahead of emerging threats and continuously improve its offerings. In summary, CrowdStrike is the digital bodyguard for the modern enterprise. It's not just a product, but a comprehensive security partner for organizations of all sizes. Their platform is only getting more essential as cyber threats grow. With every new device and every new connection, the need for advanced protection becomes more critical. For investors seeking high-growth exposure to cybersecurity, CrowdStrike is a must-own. The company's combination of rapid growth, profitability, and technological leadership makes it a standout in the sector. You're not just buying a stock, you're buying the future of digital protection. As our world becomes more connected, the value of what CrowdStrike offers will only increase. Now let's look at the company transforming how business gets done, ServiceNow. Finally, ServiceNow, ticker NOW, the workflow automation giant transforming business operations. This company is not just another tech firm, it's a game changer in how businesses operate, making processes more efficient and streamlined. Imagine a company where every process, IT requests, HR onboarding, customer service, is automated and seamless. That's ServiceNow's vision. They aim to eliminate the bottlenecks and inefficiencies that plague traditional business operations, creating a smoother, more productive work environment. They started by dominating IT service management, then expanded their platform to every department, HR, customer service, finance, and more. This expansion has allowed them to become an integral part of their clients' operations, making it difficult for competitors to displace them. ServiceNow is now the platform of platforms, the digital backbone connecting all parts of a business. This interconnectedness ensures that information flows seamlessly across departments, enhancing collaboration and decision-making. Their SaaS model delivers recurring high-margin revenue, with over 80% of the Fortune 500 as customers. This recurring revenue model provides financial stability and predictability, which is highly valued by investors. Their land and expand strategy is textbook: start with IT, then grow into every department. This approach not only increases their footprint within a company but also deepens their integration, making their platform indispensable. Renewal rates are sky-high. Once a company builds on ServiceNow, switching is nearly impossible. This high retention rate is a testament to the value and effectiveness of their platform. CEO 𝗗𝗟𝗦𝗬𝗓, ex-SAP, brings world-class leadership and a vision for enterprise-wide adoption. His experience and strategic vision are crucial in navigating the company through its growth phases and competitive landscape. The growth opportunity is massive, a $200 billion-plus addressable market, expanding into manufacturing, AI-driven workflows and more. This vast market potential provides ample room for ServiceNow to grow and innovate. Generative AI is a huge tailwind. ServiceNow is integrating AI to automate complex tasks and deliver smarter user experiences. This integration not only enhances their current offerings but also opens up new possibilities for future innovations. Financials: consistent 20% plus subscription growth, strong free cash flow, and a fortress balance sheet. These robust financial metrics underscore the company's strong market position and operational efficiency. Risks include competition from Salesforce and others, but ServiceNow's unified platform and deep integration give it a major edge. Their ability to offer a comprehensive solution that integrates seamlessly across various business functions sets them apart. In tough times, companies still need to be efficient. ServiceNow helps them do more with less, making it a defensive play. Their platform's ability to drive efficiency and cost savings makes it an attractive option even during economic downturns. Their ecosystem of partners and developers adds value and locks in customers, much like the Apple App Store. This ecosystem not only enhances the platform's capabilities, but also creates a network effect that strengthens customer loyalty. Culture matters. ServiceNow is ranked as a top place to work, fueling innovation and customer satisfaction. A positive work culture attracts top talent, which in turn drives innovation and enhances customer experiences. ServiceNow, valued at $176 billion, continues to strengthen its position in enterprise workflow automation and cloud services. With EPS at $8.04 and a P/E ratio of 105.72, the company generated $10.98 billion in revenue in 2024 and net income of $1.43 billion. A major development this year was a partnership between Apex Systems and GlideFast Consulting to launch Run ServiceNow on AWS, an AI-powered solution designed to boost platform capabilities for enterprises. This is seen as a big step forward for AI integration in the cloud space. ServiceNow has also seen strategic changes in its ecosystem. Cask NX rebranded to Ondaro and appointed Jeff Gregory as CEO, signaling renewed focus on growth and expansion. Analysts have taken notice, with some setting potential price targets as high as $1,300, reflecting strong optimism around the company's trajectory. With strategic partnerships, leadership changes, and continued AI integration, ServiceNow is well-positioned to maintain investor interest and push for further growth in the months ahead. For investors, ServiceNow is the digital operating system for modern business. Its comprehensive platform and strategic vision make it a cornerstone investment for those looking to capitalize on the digital transformation trend. Their platform is deeply embedded, their business model is robust, and their market opportunity is vast. These factors combine to create a compelling investment thesis for long-term growth. The stock trades at a premium, but you're paying for quality, consistency, and a long growth runway. This premium valuation reflects the market's confidence in ServiceNow's future prospects and its ability to deliver consistent performance. ServiceNow isn't a get-rich-quick stock, it's a steady compounder for the core of your portfolio. Its consistent growth and strong market position make it a reliable choice for long-term investors. As companies compete for talent, ServiceNow's HR workflows help attract and retain the best people. Their solutions streamline HR processes, making it easier for companies to manage their workforce effectively. The platform scales from mid-sized firms to global giants, serving the entire enterprise spectrum. This scalability ensures that ServiceNow can meet the needs of a diverse range of clients, from small businesses to large multinational corporations. In summary, ServiceNow is an elite software company at the heart of digital transformation. Their innovative solutions and strategic vision position them as a leader in the industry. Their sticky product, proven expansion model, and world-class leadership make them a best-in-breed investment. These attributes ensure that ServiceNow remains a top choice for businesses looking to modernize their operations. If you want exposure to the future of work, ServiceNow is your ticket. Their platform is designed to meet the evolving needs of modern businesses, making them a key player in the future of work. Now let's wrap up with your next move as an investor. Consider how ServiceNow fits into your overall investment strategy and whether its growth potential aligns with your financial goals. There you have it, 3 tech powerhouses shaping our digital future: ASML, CrowdStrike, and ServiceNow. Each has a deep moat, massive growth runway, and a business model built for long-term success. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now your turn. Which company has the most powerful economic moat? ASML, CrowdStrike, or ServiceNow? Drop your pick in the comments. Don't forget to like, share, and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one. Invest smart and build your future.